And despite those announcements, President Obama made a fresh appeal to European leaders to resolve the debt crisis. He said the situation was a significant threat to America's weak recovery and that he strongly hoped a clear plan of action would emerge within the next month.
What I've been seeing over the last month is a recognition by European leaders of the urgency of the situation. And nobody's obviously going to be affected more than they will be if the situation there spins out of control. So I'm confident that they want to get this done. I think there's some technical issues that they're working on in terms of how they get how do they get enough firepower to let the markets know that they're going to be standing behind Euro members who may be in a weaker position. But they've got to act fast.
Now, Mark Bloomfield is the president of the American Council for Capital Formation. He joins me now from our studio in Washington. Now, Mr. Bloomfield, how much is this move by the European Central Bank going to help solve things, or is it more of a temporary salve on this situation?
Unfortunately, I think it is more of a temporary solve, continued talk as opposed to real action. I think the United States is hostage to Europe, and I think hostage is Europe to the United States, and nobody is willing to make the hard political decisions.
Now, the move by the European Central Bank is essentially the same sort of thing that was done after the Lehman Brothers collapse during the depths of the last recession. Is there much evidence, though, that it worked then?
I don't think so. I think it may have staved off a serious depression, but we're at the end of the string as far as monetary policy is concerned in the United States and in Europe. We are facing serious structural problems, which you're very, very much aware of, which is huge deficits, huge debts in the United States and Europe. And I'm not sure what this will do to deal with those fundamental structural problems. Democracies around the world today cannot deal with those structural economic challenges.
Now, it's interesting you say that. What can possibly work then in this situation?
Well, there are two outcomes. One outcome is political leadership. And I think both parties, if we're talking about the United States and Europe, can be faulted for that. The other reality is the financial markets react. And as you know, just the other day, there was a rumor that Europe was going to get its structural situation under control, and the markets in CAC 40 and in the U.S. went up. And then, of course, it turned out that that was a rumor in the Financial Times. So you have to meet the test of the markets, and the markets want long-term fiscal readjustment. They also want to have confidence. In the United States, quite frankly, the lack of confidence is a result of political instability, more regulation, not knowing what the landscape will be in terms of businesses operating, consumers scared of their job, of their retirement. What you have, as you know, on Wall Street now is a revolt from the left, which is similar to that from the right. People are alienated, and they don't have confidence in the political system and the economic system.
Right. Well, we'll have to leave it on that note. Mark Bloomfield there from Washington.